clock. It's 1 o'clock, and we will begin the Tax Exempt Review Committee agenda for today, Tuesday, April 28th. And I'll just kind of go through, if it's okay, who's here and who's online, just so everybody can know what's going on. Jim Gilmore is joining us. Ben Hushka, Dave Pepcorn, we're here. And then online we have joining us Jim Boos, Kyle Fryer, Bruce Grubb, Jessica. Can you say your last name? I'm sorry, Jessica. Are you online? I'm sorry, I should know that. Joelle Stoller is an applicant, Jackie Gapp, and Eric Johnson. So that's just so everybody can know who's online. And please, when we talk, if you don't mind giving your name, just so we know what's going on. And hopefully you all have the agenda in front of you. Agenda item number 1 is to approve the Tax Exempt Review Committee minute meetings from 1/28/19. And it's the January 28th, 2020 minutes, and it's page 1 through 3. And if everybody's had a chance to look at them, if there's any changes or corrections, we will accept a motion.
Jim Boos will make a motion to accept the minutes for the January 28th, 2020 meeting as presented in the packet.
And we have a motion from
second.
We have a motion from Jim and a second by Jessica. Any other comments or questions? All those in favor say aye. Aye.
Aye.
Opposed, same sign. Motion carries. And with that, we'll move to number 2, a 5-year new industry exemption application, financial business systems. And if it's okay, we'll have Ben start us out with kind of a quick summary, and then we'll go from there. Ben.
Sure. This is an application for a new building in a new location for their expansion. We do have the point system that we can discuss after we've heard from the applicant, but I would recommend that the applicant explain the nature of the expansion and the exemption that they're asking for.
And with that, is it Joelle? If you're on the line, would you at least acknowledge that you're on the line so you can hear us?
I am on the line and can hear. Thank you.
And so if you wouldn't mind, if you could just give us a quick summary of what your business does, and then some of the basic concepts, and we'll hopefully have some questions for you.
Sure, no problem. So I'd just like to thank the committee for taking the time to review our application for tax exemption. Just to give a brief summary of FBS for the benefit of the committee. FBS was incorporated in 1978, so we've been a growing business in Fargo for the past 42 years. Our business has evolved over the years, as you can imagine. We've serviced the real estate industry in some capacity over those years. In our more recent history, going back from in-house printing of listing books, which was a realtor's main source of information of the market, to next growing into a desktop software platform, and to our current age of realtors being able to conduct business from really wherever they are on our mobile phone app. We currently employ 129 people. Our average wage is around $89,000 per year. Since we're a software company, our greatest expense on the income statement is payroll. The types of jobs that we create are mostly in the tech sector, from database administrators to web developers to customer support technicians. We've had tremendous growth in the last 10 years. Over the past 5 years, our employee count has increased by 39. And I just want to highlight that because the numbers I provided on the application may very well turn out to be conservative. As I described in the addendum, we're going to be launching a new product mid-year in 2020 called Flow Plan. This is a different revenue model for us, so it could turn out that we will be hiring at a much higher rate. I didn't want to overestimate because we are out ahead of the launch, but our current customers are very excited about this product, and so we know it will be well received in the industry. The exciting part is for us is that we can sell to our current existing customer base, but we can also sell to multiple listing services who are currently working with a different software vendor. So if we really hit this thing out of the park, my revenue and expense numbers will be on the bottom end of that revenue and expense growth. I'm very confident of that. Another aspect of FBS that is important to share is that when we hire, we are hiring a fellow owner of the company. We are a 100% employee-owned company. Our current market value is over $30 million. This has a direct impact on all owners of the company. It offers additional security for our retirement, and each person has a direct impact really on how far we can take the company. So not only are we paying higher wages when those employees reach retirement age or decide to pursue a career somewhere else, those folks are receiving stock distributions that have a direct impact on the economy as well. According to our last repurchase study, in the next 5 years, we'll be distributing about $7.2 million back to employee owners. So in summary, FBS is an established company in Fargo. We are weathering this economic downturn quite well at the present time. We've retained all employees and are safely working from home at the same time. So we're a tech company. We're adding a much desired diversity to the North Dakota economy. We plan to stay in Fargo and add to the local economy in every way that we can. We're outgrowing our existing space. Currently, we're leasing 2 building units. So we're really desiring a space that will fit our needs moving forward and get back to having 1 building to house our growing employee base. The tax exemption would greatly help us out, being able to use those tax savings to invest back into the business through capital needs, adding to our employee base, and funding those stock buybacks. So I guess just to sum up, we would greatly appreciate the support of the city through this tax exemption. We do realize that other cities would likely have incentives for us to build, but we really prefer to stay within the city of Fargo. So with that, I would welcome any questions anybody has.
Very good. Thank you very much, Joelle. And maybe, Ben, you can just talk a little bit about kind of the score and some of those things. And then if anybody online has a question, if you don't mind just raising your hand so you can catch my eye, and we'll answer questions after that. But Ben, can you just give us a summary of the score, and then also they had previous conditions?
Sure. The scoring system, again, is just a guide to kind of see if we're in the ballpark. It requires 100 points for the scoring system to give a recommendation for approval. It is heavily weighted on the number of jobs added the initial year, and it doesn't look beyond the first year, and it is for a firm that has the number of current employees. It goes on a percentage of the current jobs that they're adding the initial year. But like Joelle said, they are adding the same amount that they are the first year for the subsequent years, and anticipate that to be even conservative. So it is a recommendation. One thing from a historical perspective that this committee has focused on, in addition to jobs added, is if the applicant is going into a new product line and generating even more jobs from that and additional local revenue, which they clearly are. So just a few things to consider in the terms of just the point system.
And just one thing that's a little bit confusing is, it shows the first year they're going to add 4 employees, but I think what she said is basically they're being very conservative, but after that they're estimating 3 employees each year. And so that's the other thing it isn't just 3 totally, it's 3 each year. And then the other thing that caught my eye was that the hourly wage is over $35 an hour. So that's obviously a very beneficial thing. And then, Ben, if you don't mind talking a little bit, so in the past, they had received an exemption for their original building. So if you wouldn't mind talking a little bit about that, we'd appreciate it.
They applied for and received this same 5-year exemption for their original building. So typically what this committee has done in an expansion is, if they grant the exemption, they would grant it on, or recommend granting it on, the incremental difference in value between the new expanded facility and the value of their current building.
Very good. And so I don't know if anybody online has any questions. We would sure be willing to answer any. Jim, go ahead.
So Jim Booth here, Mr. Chairman. Can we talk a little bit more, either Joel or whomever, about the new building they have proposed, the size of it, location, and any unique characteristics of that building?
I can tackle that one, and Joel can fill in. Kyle Fryer, representing Property Resources Group and the landlord side of this. One, just confirm, which the application does already, but the benefit of the incentive will pass through, even though this is a lease, so that'll pass through to financial business systems from that side of it. It's a 2-story, slightly over 18,000 square foot building, being located just as the address shows, 4601 33rd Avenue. So if you know where the new cutting edge jewelry location is, it'd be directly west of that, kind of in the neighborhood of B&G's new corporate office building and the Integrion building, which had come through this similar process and was approved as well, given the uniqueness of their building. So 2-story, like I said, office building, steel frame construction with wood from that side of it on the interior framing. And yeah, it'll be geared and set up and wired accordingly for the tech company that they are.
Okay.
Any other comments or questions from anybody, including the applicant? Otherwise, I think we have all the information. Ben, do you have anything to add?
Just one more quick thing, going back to the incremental difference. You can see on the application that they estimated the new structure at about 3.8 million. Based on the current mill levy, that would be a savings in tax annually of about 55,000. In looking at their current building, the difference in value between the two is about 1.1 million. So rather than a $55,000 tax savings each year, it would amount to a little over 16,000. So that's the difference between the incremental difference and the full value.
So then it's for 5 years, and it's 16,000 a year approximately.
Correct.
Okay, very good. Any other comments or questions from anybody? Otherwise, we'll accept a motion.
Can I ask a question? Was the application for that entire 55,000 a year, or was it for the incremental, approximately 16,000?
Yeah.
I didn't catch the start of that question.
Ben, the question is, the application that was submitted, was it for the entire 55,000 a year or that incremental amount of about 16 that you mentioned?
The application was for the 55,000, the full value of the new building.
Mm-hmm. Well, I agree, Ben, that it's typically in these situations, we only exempt that incremental growth factor. So I think that's consistent with our policy and precedent, pretty clear, so.
Any other comments or questions? So then I guess, would the motion then, if you're in favor of it, would it be for the full 55,000 for 5 years, or would it, I guess I'm confused on that, Ben.
Well, typically, if, like Jim said, if we were to follow policy, the motion would be for the incremental difference in value.
Mr. Chairman?
Yes.
So Ben, what you're saying is they applied for the full amount, but as Jim says, according to our policy, we would normally just allow the 15,000.
Right.
I would make a motion to follow our policy.
We have a motion from the mayor. Do we have a second?
Jim Booth will second that motion.
We have a second by Jim. Any other comments or questions? All those in favor say aye.
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 Opposed, same sign. Motion carries. Thank you very much, and thank you, Joel, and good luck. And we will look forward to seeing this at the City Commission. That's the next step, so thank you very much. And we will move on to...
Thank you.
You bet. Now we'll move on. The last item on our agenda, the Stop and Go Tax Increment Financing District. And Jim Gilmore is going to give us a quick summary of that.
I just wanted to take some time to provide you with some information on a tax increment financing district that'll be ending this year. Often we don't give these reports, and you don't, after you approve a TIF, you don't really see how they turned out. And so I thought it'd be helpful for you to understand how these do end and what the tax impact would be, and how this particular one turned out compared to how what we projected it to be. This tax increment financing district and renewal plan was approved by the City Commission in 2006. At that time, at this northeast corner of 19th Avenue North and University was a site of 4 different buildings. There was an older gas station, there was an old motel that was still in use, a small apartment building, and a single-story office building. Both the apartments and the old motel, there were some significant code issues with the condition of those structures, and there were also some access issues in an older lift station that served the site. And so the proposed redevelopment was to demolish the existing structures. There was a city improvements or things that benefit the city. A new lift station was installed to replace the old one. There were stormwater facilities put in, newer sidewalks, and also the access was limited on 19th Avenue North. A lot of people were still trying to turn left out of that entrance, and with the median coming, that wasn't feasible to do anymore. The final project, what it took about 2 years to complete, was the development of then the Stop and Go Center. I believe the name is now Casey's, operates that gas station. But the final project was a 6,000 square foot gas station, 28,000 square feet of office and commercial space on the main floor of that building, and 75 apartments. And so the developer developed that actually a little more than we had anticipated in the plan. This shows both the projected and the actual, how it turned out to be. We had projected a property tax increase of 6.2 million. Actually, it ended up being just shy of 14 million. So the increase in the property was double what we anticipated. The property taxes have also been higher. We had projected 142,000 a year. It turned out to be 191. And this is even more significant when you think of how the mill levy has dropped over the last dozen years. At the time it was approved, we estimated it would take 15 years of TIF revenue to fully pay for all those costs. Some that benefited the developers, some that benefited the city. Actually, after 12 years now, the developer has been fully repaid for all his extraordinary expenses and improvements that he made that benefited the city. And so this table shows that after that 12 years, even after the note was paid off, there was an $81,000 balance. The finance director has returned this to the county, and then the county is distributing these property taxes to the Fargo schools, the city, the park district, and the county is showing. When we go and look at next year, the property taxes for this property will stay about the same. There'll be $189,000 of increased property taxes that'll go to the taxing jurisdictions. And finally, I just wanted to note that we anticipate over the next year, 3 other TIFs will close out. One is a site of an old McDonald's northwest of 32nd Avenue North and Broadway. The other is a Shotwell Greenhouse, as well as the Dakota Bank in downtown. So altogether, these 4 TIFs that are closing out will provide another $568,000 to these different taxing jurisdictions, as they're shown on this table. So just want you to be aware of this. And sometimes you just kind of fade away and you don't see that these TIFs end. And so I thought it was important to, as we look at future TIFs, to understand the process for closing these out and how we estimate what the income is going to be. So be happy to answer any questions or hear any comments.
Well, thank you very much for doing that, Jim. And my question I have for you is, so when they close out, how does that go? Is there a formal action that needs to take place, or can you just talk a little bit about that?
Yes, the finance director, once he's paid all obligations, he's required to notify the county that and return any funds. And so in this case, there was this $81,000 left. The developer had been fully paid. The city didn't have any costs, and he sends that money back to the county. And then the city assessor, in his annual report each year, in this next year, this particular TIF is not listed on the list of districts. And so they're sort of notified in two ways, one by the finance director, as well as it being excluded from the city assessor's tax increment list.
So thank you very much, and I do think this would be good to have at the city commission, just so people realize. So when you talk about, there are some people that say, well, these TIFs increase property taxes. In fact, it's just the opposite. The money, obviously, this would reduce the amount of property taxes that everyone else pays. So that's good news, and so we like hearing that. So are there any comments or questions from anybody either here or online? Otherwise, that's the last item on our agenda. I think it's nice to close with some good news, and so Ben, go ahead.
I was just going to add, from a technical perspective, like Jim said, we include this in our annual report. There's only one point in time per year where we can either add or remove a TIF, and that's when we certify the assessment roll. That's why that balance happened. If it was any other type of thing that once it ended, you do it mid-year. So that's why there was the balance. So basically, when we certify our assessment roll next year, or for next year, that's when we'll remove those other TIFs. So what we send the county for the regular tax is the base value before the redevelopment. We send them another figure, the difference between the current value and the base value, and that's where they capture and pay back the financing for the TIF.
Very good. Anybody else have any questions online? Otherwise, I think it went pretty smoothly for our first attempt at multiple, and so thank everybody for your time. We're hopeful, actually we're looking forward to Friday where things are going to start getting back to normal a little bit, so we're looking forward to that. Thank you everybody for participating, and have a good afternoon. We are adjourned.